You're watching Dukascopy TV. I'm Dara McDermott. We have Bruno Estier back in the studio, and last time we spoke about the Nikkei as it was about to give a signal. Bruno, welcome today.
Good morning.
So Bruno, what actually happened?
Well, we need to back up a little bit and see what happened not only on the Nikkei, but in fact on the currency related to the Nikkei, the yen. And here we have an example since mid-June of the evolution of euro against the yen, and we noticed that it has been narrowing in a kind of a small triangle, and very recently on the 9th of October it hit the support trend line, the blue line here, and started to move at the same time as the Nikkei is moving up.
And Bruno, was this due to yen weakness against the US dollar?
Well, we'll see that it happened at the same time about. Here we have the euro yen, which is rising on the top, and here down we see also the yen, which is weakening against an index, which means basically the dollar yen is moving up. But we are still within this trading range.
But Bruno, on the Nikkei, we are out of the 6-month-long trading range.
Well, not yet. As you can see here from August, we are still within a narrow range between 13,500 and 14,700. But here we had something we looked at last time, namely the fact that, you remember, we have this kind of a clouds, which is a kind of two moving average, and you see the price moving down, up, down to the moving average, and from there upwards, with some momentum showing up here on the daily charts.
But for that move to actually last, how does it look on a weekly chart?
Well, you're right. So we need to move from the daily charts to the weekly chart to get some perspective. Okay. And we remember that in May, we made a top at 16,000. Then there was a long trading range, which lasted now almost 4 or 5 months. But it has a specific form. And this form is the one of a so-called, again, triangle. And we have also 5 branches in this triangle. One down from 16,000, a second up, another down, the third one, a fourth up, and the last one is a fifth one. Usually triangles are made of 5 branches, and when you remain within the trend line support of the triangle and you start to move up, here comes really the signals. How it will look like, most probably it's not going to shoot up to the moon right away. It's going to break above the above trend line or the resistance trend line, the ceiling, pull back to it a little bit, give a second chance, and then later on, at the end of December, we might see a move towards 16,000. So our triangle pattern is 16,500 to 17,500.
Okay, so what actually happens beyond 16,000?
Well, we'd like to know, but the best thing is just even go back further in time and looked at the Nikkei from 1999, when we have these declining peaks, one time around 21,000, another time in 2007 at 18,300, and then recently in May we had it at 16,000. And this represents, of course, the major long-term descending trend line since the 80s, and this is possibly, if we break that trend line, the end of the major secular bear market in the Nikkei. Of course, here on that chart, we have the opportunity to measure different things. As we noticed first, the move which we had in the first part of the year, especially starting in November last year, going into May, was accompanied by momentum rising up. And still this momentum, despite the correction for 4 months, is still positive, and some of the oscillators is also moving up, still moving up. Therefore, we are not going to stop only at this resistance trend line being a ceiling for every over a decade. It's probably going to move through that, and it could move all the way up to 21,500.
Okay, so let's hope that this bullish outlook will actually develop.
We hope so.
Thank you very much, Bruno.
You're welcome.
And thank you for watching Dukascopy TV. Now do stay tuned for more economic and forex analysis. And Bruno will be back next week. Goodbye for now.